Hi folks, Lee Gettess here with the Market Sense for the week of September 6th, 2016. Trade Navigator provides all the charts that we use in our presentations. And looking at a weekly bond market chart, boy, you could just draw ditto lines for the last 6, 7 weeks, couldn't you? They don't look a whole lot different. They have held down here in the 168.28 area, which is this lower moving average, and we thought they might have trouble about a point higher, 69.28, but they seem to have gone through that very quickly. And let me point out that this price bar here, which is a weekly price bar, compared to the previous weeks, that all happened in one day. We had Monday on Tuesday this week, and that's just one day. So they certainly look like they're trying to target the 171.20 area up here. Doesn't mean they'll get there, but that's what they're targeting. And if they could get going and take out the highs of all this sideways, boy, that would be something. I mean, they could really get rolling there. As quiet as things have been, traders are always looking for things to pick up after Labor Day. And, fortunately, most of the time it does. But it often isn't until the first full week after Labor Day. So this is a surprising amount of movement early in the week. It might continue, but it could just spend itself out right away. So, just be on guard. Don't expect great things. But, of course, the minute you stop looking for it, they come, right? Moving on to the S&P 500, we had a little down and bounce back in the last couple of weeks, which could be a sign of things to come. Even though they just barely closed above the middle moving average last week, they seem to be using it. That's the 2174 area. Seem to be using that as support so far, and they're up here targeting 2189. But as you can see, that's getting really close to these old highs here where they got rejected awful fast once they made them. If they can get going, if they can take out these highs, boy, we have the potential to really get going. The upper Keltner is above 2115, or I'm sorry, it's above 2208. And that's not the limit. They could go a lot higher than that. Now, to be honest, because this had just barely closed above this middle moving average, we thought there was a good chance that they could go below 2160 down here to this support in this area. And that's still a possibility. Just because they're up here early doesn't mean they're not going to come down and make the low for the week here or lower. So don't get complacent. But the same thing is true as I said about the bonds. Volume and volatility tends to pick up after Labor Day, not necessarily the partial week after Labor Day. So, I'm just sort of tempering my expectations. But boy, first day of the week looks awful good. So that's what we've got for you today. I hope you can find something profitable to get